Hello, I'm Mitch Goldberg with ClientFirst Strategy. We often look at companies through the prism of growth versus value, and while I think it's important to use both when constructing a portfolio, there's another way I like to look at companies that's very similar but has some of its own subtle nuances. That's asset light versus asset heavy. And if you think about a company that's asset heavy, you're typically talking about bricks and mortar, you're talking about old line established companies. Again, not knocking them, I do have quite a few of them in portfolios that I manage. But when I think about these companies, I think about a lot of debt that they often carry. And they have to invest in a lot of machinery and trucks. They have a lot of legacy costs. They spend a lot of money to maintain their businesses and even more to actually grow their business. And then if you take a look at asset-light companies, these are typically companies with little or no debt. They typically have higher profit margins. And you're talking about companies usually in technology in terms of cloud computing, big data, software, social media. And the thing about the asset-light companies is they actually farm out the heavy lifting to companies like UPS and FedEx, for logistics and transportation, delivery, and they farm out their internet connectivity to companies like Verizon and AT&T. Brick and mortar retailers as an example. If you think that they're struggling just to survive against the onslaught of Amazon in a time when we have super low interest rates and very low unemployment, it's almost frightening to think about what can happen to retailers during the next recession. There's nothing more depressing to me than the sight of a dead, bankrupt, empty carcass of a mall. And sure, it's true, asset-heavy companies typically pay decent dividends and have lower valuation metrics like lower PE ratios than asset-light companies. But to me, that's really their way of compensating investors for the lower growth profile. And this is the main reason why asset-light companies are typically afforded higher valuations by investors.